Guys, most Americans don't follow the Middle East closely. Let's just be real. But one thing we do notice is when gas prices go up 30 or 40%. And that is why what is happening right now in Iran matters to your wallet right now. All of our wallets. Oil prices have surged. Gas prices have moved higher. We see that. And investors are now watching whether this is going to create another inflation problem for us. Just days before the Fed meets on March 17th and March 18th. Now, since the U.S. and Israel launched strikes against Iran back on February 28th, the global oil market has been on edge. In just the first week or two of the conflict, the national average price of gasoline here in the U.S. has jumped up about 21%, rising to almost, as an average, $3.63 per gallon. Now, I know if you live in California, it's a lot higher than that, right? But energy markets reacted immediately to this whole conflict, right? Some estimates show that crude oil has risen more than 25% since this conflict or war has began, with prices of oil going up to over $119 per barrel at one point. The reason is simple, guys. Global energy markets are flat out worried about oil supply right now. And when oil supply is threatened, prices move quickly, and the effects ripple through the rest of our economy. That's how important oil is. So in this video, I want to explain to you why this is happening, what OPEC Plus has to do with it, and why the Strait of Hormuz matters so much in this whole conflict. And then I want to talk about what smart households and long-term investors should be doing next, okay? First thing is first. Oil, guys, is the blood of the global economy, okay? Oil is not just about gas. Oil powers airplanes. Oil is what moves cargo ships across oceans, okay? Oil fuels the trucks that transport food and materials and products all across the country. Oil is also, check this out, oil is used to make plastics, to make chemicals, to make fertilizers, and to make many of the manufactured products that we use. So when we see oil prices go up, guess what? The cost of transportation goes up. And when the cost of transportation goes up, the cost of goods go up, right? And when the cost of goods go up, inflation goes up. And that's why governments, investors, and central banks all around the world, they watch oil prices very closely. Oil is not just, so here's the kicker here, guys. Oil is not just some energy story for the politicians. Oil is an economic story that we all need to be paying attention to. Now, to understand oil prices, you got to first kind of understand a group called OPEC. OPEC stands for Organization of Petroleum Exporting Countries. It's essentially an alliance or friendship between major oil-producing nations that pretty much coordinate how much oil they plan to produce. Countries in OPEC include Saudi Arabia, Iran, Iraq, Kuwait, the UAE, and several other major oil producers. Now, together, these countries control a large portion of the world's oil supply. But today, let me talk about today. That was OPEC. The more powerful version of this alliance called OPEC is something called OPEC Plus. Now, what is OPEC Plus? OPEC Plus is simply the original OPEC countries plus several additional oil-producing countries. One of the biggest, obviously, is Russia. Okay, this larger group called OPEC Plus, they work together to influence the global oil supply. And the reason they do that is simple. Oil prices are driven largely by supply and somewhat by demand. But if global supply drops while demand stays strong, our oil prices are going to rise, okay? Now, if oil supply increases, prices usually fall. So sometimes these OPEC Plus countries, they'll intentionally cut production of oil to keep oil prices higher. So in many ways, what they're doing is they're managing the supply of one of the most valuable natural resources on the planet. And from their perspective, okay, let's be fair here. Oil revenue is a major part of their national economies, and much of it comes directly from the resources in their own ground, the oil that they actually have in their own soil. So what this means for your households right now, guys, you can expect higher fuel costs. You need to watch grocery and shipping related inflation because it could go up pretty quickly here. And obviously, we always want to avoid panic decisions and protect our cash flow, right? Keep your plan, whatever plan you're working for your personal finances, keep it intact. You ain't got to change everything right now, but just be aware. Now, let me talk about this because this matters a lot. Iran is one of the largest oil producing countries in the world. But the bigger issue is not just Iran's oil production. The bigger issue may just be where Iran is actually located on the map, okay? Iran sits right next to one of the most strategically important shipping routes on the entire planet. It's a little narrow stretch of water that I mentioned earlier. It's called the Strait of Hormuz. And what happens in that one location can influence oil prices around the world, okay? This little narrow channel of water called the Strait of Hormuz is just simply a little passage between Iran and Oman. It connects the Persian Gulf to the ocean itself, right? And it really serves as one of the most important energy transportation routes in the world. Yeah, I know you probably heard of the Panama Canal, but the Strait of Hormuz is vital, okay? About 1 out of every 5 barrels of oil used globally normally passes through that narrow little waterway called the Strait of Hormuz. That means roughly 20% of the world's oil supply flows through here. And right now, global markets around the world are worried that shipping through that Strait of Hormuz could be disrupted by this conflict. It already has been disrupted. Oil tankers have been stranded out there, and some shipments, as we speak today, have slowed or stopped entirely for fear of going through there. Now, this strait is not physically blocked necessarily, but there's been threats and attacks. And some insurance issues have led a lot of tankers out there to avoid this little narrow waterway right now, which right now is disrupting the flow of oil, okay? So even a partial disruption to this Strait of Hormuz matters a lot. If that were to go on for an extended period of time, oil prices could go up a lot very fast, even more than they've done already, because global supply would go down. Remember what I said? Oil supply shrinks and prices go up. So when corporations and countries aren't getting the oil that they need and the supply goes down, we feel it. And don't get it twisted here now. America uses most of the oil produced in the world. Okay, we know that. But every country on the planet needs oil and uses oil. Now, here's the part that may surprise a lot of people, okay? The U.S. now, for the last several years, is the largest oil producer in the world of any country. Much of that growth has come from what's called shale production. They call it shale production, okay? Without getting too technical, that's just modern drilling techniques that allow companies to extract oil from deep rock formations in places like Texas and North Dakota, right? But even though the U.S. produces more oil than any other country on the planet, Americans are still affected by global oil prices, right? People always wonder, well, how can the price of oil for America go up when we're producing a lot of it? Well, it's the global oil prices and the supply of global oil that really has a big effect on the prices, not the fact that we produce it, right? We got to remember that oil is traded on a global market. Okay, and that's not something that's talked about much, but I learned a lot of this, guys, several years ago when I was doing these videos when Biden released some of our surplus oil by selling it on this open market. We have oil reserves that are for emergencies. And when it's sold, it can bring down the prices of our gas and it can lower the amount of surplus extra oil that we have for emergencies, right? But I say all that to say this. We got to realize that even if oil is pumped in North Dakota or Texas, right, the price is still influenced by the global oil supply and any disruptions to that supply. Oil is a heavily supply side influenced commodity, okay? So when things happen over in the Middle East that affect that supply, we feel it. Even though we produce a lot of oil, we still feel it at the gas pump, right? So smart investors, let me talk to you real quick. Smart investors, we should be watching several key signals in the market when we see these geopolitical or wars and things going on, especially ones that affect oil. Let's talk about them real quick. We're going to be watching what? Oil supply. We're going to be watching shipping disruptions that may happen. We're going to be watching OPEC Plus production decisions that they decide to make during this time. And we're going to be watching the global demand. Even though it's less of importance than the actual supply, it still matters. You probably heard the phrase, drill, baby, drill, right? You probably heard that from a politician. Part of the idea behind that policy is to expand our American energy production, so we Americans don't have to rely too heavily on oil controlled by OPEC Plus countries. Greater energy independence by America is what could maybe reduce America's vulnerability to these global oil supply disruptions, right? And OPEC Plus decisions. So that's how this phrase, drill, baby, drill, kind of plays into this whole thing. It's all about trying to reduce America's dependence on outside oil and America having more in the say of the global supply of oil. Now, look, I'm not an expert. I'm just trying to explain this thing to you in plain English, because sometimes we get these news stories that go right over this stuff, and you need to understand it in a more basic way how this affects us. But that's why energy policy is so important. It's a very important economic issue that a lot of us just simply don't understand. But I'm going to do my part to help us understand this thing. Now, here's where this story becomes even more interesting for us as Americans, okay? We got to talk about this. As oil prices have surged during this conflict, during this war, President Trump has been urging the Federal Reserve to cut interest rates when they meet later this week. So here's the problem. Higher oil prices can push inflation higher, as we talked about. Gas prices rise, transportation costs go up, inflation pressure, right, spread across the whole country. So if what is happening over in Iran pushes oil prices higher and pushes inflation maybe higher, do you really think the Fed is going to cut interest rates and risk adding even more inflation to the system right now during this conflict? Personally, I don't think that's very likely, okay? In other words, I don't think the Fed is going to cut the interest rates. Remember, cutting interest rates could be inflationary in and of itself, right? Because it gets people to go spend more money and it drives demand up. And when demand goes up, prices go up. But we'll see. What the Federal Reserve decides to do this week, it's going to be very interesting. Now, historically, major spikes in oil prices have often been followed by economic slowdowns. I mean, we can go back to 1973, we can go to 1979, we can go to even right before 2008, that financial crisis. When energy becomes more expensive, the cost of almost everything in our economy goes up. And let's be real, gas is one of the prices that Americans, we notice the most, right? Every time we leave our house or we have to leave our house, it's going to affect what we see on the billboards at the gas stations, and it's going to affect the amount of money coming out of our pocket to actually go into our cars or vehicles, right? So when gas prices rise fast, what happens is families end up cutting back on things like going out to eat at the restaurants, traveling, entertainment, all that stuff slows down. Again, the price of gas has a ripple effect on our broader economy in a lot of ways, okay? For long-term investors, the most important thing is stay disciplined. These geopolitical wars and events and strikes on this and strikes on that, and listen, it creates short-term volatility in the stock market because the stock market don't like surprises. The stock market doesn't like unknowns. But history shows this. The markets, they usually recover once some of the uncertainty clears out of the way. So again, smart investors, stay invested. Continue dollar cost averaging. Avoid emotional decisions driven by the headlines you see on social media or on TV. Because over long stretches of time, the stock market has consistently recovered from this type of stuff that we're seeing right now. The situation involving Iran and global oil supply is something the entire world is watching closely right now. Okay? Because oil prices are going to have an effect on inflation, not just in America, but all countries. So the key is this: don't panic. Keep investing for the long term. But this is why I say this massive oil problem could change everything. We don't want a gas shock. But my thing is, just be ready, okay? If you got value from this video, do me a favor, drop me a comment below. And please share this video with somebody who you know. And remember, guys, the best person who's going to take care of the old you is the young you. Until the next video, peace.